It's Matt Simpson from FOREXcom, and today I want to discuss what the latest FOMC meeting means for the US dollar and some FX majors. In a nutshell, the Fed held their rates at 425 to 450 range as widely expected, although the meeting wasn't quite as dovish as some had hoped, but it was in line with what I had been warning. Inflation forecasts have been upgraded for 2025 and 2026, and growth has been lowered, of course, due to Trump's tariffs. Now, in his press conference, Jerome Powell warned that higher prices are expected over the coming months, although they don't know to what degree. He also said the job market isn't crying out for rate cuts, and that it might be smart to wait for a couple of months in regarding to any change in policy. Now, that doesn't sound particularly dovish to me, and while he has kept the door open to a September cut, he didn't sound particularly confident. Now, Fed Fund futures were implying a rate of around 60% after the meeting, and that could also be quite optimistic. And if PC inflation ticks higher next week, that could further support what I believe to be an oversold US dollar. Looking at the futures market, asset managers reached a record level of net short exposure to the US dollar index last week, and that could point to a sentiment extreme. And a rising dollar, which you're already seeing, could prompt short covering to further fuel a rally. The monthly chart shows prices are rising back above 98 with a heavily oversold RSI 2 setting. A bullish divergence has formed on the weekly RSI 2 and RSI 14, and prices are back above the December low. So I think a move to at least 100 near the 200-week simple moving average is now on the cards, and that could see the euro and pound continue lower, which are already showing signs of topping out. The Aussie and Kiwi could break lower from these very tight ranges, and dollar CAD could head for 140, which is the base of this falling wedge pattern. So in a nutshell, I believe the ground has been laid for a high US dollar in the coming weeks. The Fed aren't that dovish, and a September cut is not a given, and inflation does tick higher. We're probably looking at a stronger dollar, and that could further force short covering from an oversold market.